Good evening, everyone. Welcome to another episode of your market weekly market analysis segment. I'm God's Power Unbearable, taking you through the market, see what has happened last trading week. Then we'll anticipate what's going to happen the new trading week into February. All right, so this is the dollar index. The dollar index. Let's go to weekly charts. So on the weekly time frame, last 2 weeks ago, the last review we had, when I saw this, I knew it has traded into a bearish order block. Now, I knew that it's either it's going to consolidate here or reject and go lower. Because, of course, the bearish order block has to act as resistance to send price lower. So on the daily time frame, I took your attention to the daily time frame, and I told you that price is going to trade into this volume imbalance, this area where only wicks, traded, no body, no candles body, just the wicks. So I expected price to trade to that level. It didn't actually. I think it created equal lows. Let me see. Okay, almost relatively equal lows. And you can see how much time is spending at this area. Now, we have buy side liquidity resting here. We have sell side liquidity resting here as well. This could be a market maker sell module, second stage redistribution to go lower to sweep these lows. It could also be this little fractal buy model to sweep this liquidity high and then before it resumes lower. At this point, it's within the range high to low, around 50% or thereabout. That's where it's consolidating. So it could go either ways. So I'm going to say, though I favor the downside because of this inefficiency right here, I favor that price is going to go lower. So at least closing this gap, that's what I'm looking at. That's gone to my neck. I'll be bearish on dollar to attack this level, and then see if it has potentials to go to attack the sell side resting below these lows before any form of bullishness. Because of this weekly bearish order block resting here. Now, what changes my bias and my sentiment for dollar index? If it trades and closes above this green candle and the body closes above it, in other words, it trades and it closes above, let me put a line. The body trades and closes above here, then we'll go attack, we'll run higher to attack this sell side and then get into this inefficiency that I've been outlining for months. That is what will change my bias. For now, I'm still bearish on the dollar until it goes above this high. So I'm anticipating and I'm expecting that the dollar will in fact trade on weekly time frame, consolidate here, show me like a bearish movement or within the same zone. So that will give it time to fill in this inefficiency and maybe break through to clear these lows and then back to the range. Then we'll know. So from that signature, I'll be able to know if it's going to go lower or not. For now, this is my low hanging fruit. I want to see price. Last week I told us that it's going to get there. It didn't get there, consolidated. I want to see if it has willingness to get there this week. But if it closes above these highs, then and only then are we going to go higher to attack the buy side resting. Yeah, it's resting here. So that's my prognostication for the dollar index daily and weekly. From 4 hours time, we can see the swap liquidity here, broke structure, came back again, tested the bearish order block, and we can see how it's trading within the range. So if we go one more time, clear these eyes and trade lower. That's still in the cards. But I am an intraday and a day trader, so I look at what happens, liquidity is resting, buy side and sell side liquidities every day, and I trade accordingly. Until, because January is like the Asian range, it's consolidation. Okay, that's where market makers accumulate price, accumulate orders for the movements, the real movements that we'll call from March. All right. So January into February, we have this accumulation phase where price will trade within a range. That's what has been happening throughout. That's why if it does any significant price run, it consolidates, run again, consolidates. So that's what it has been doing throughout this year. So we started the year here, rallied up, and that was on Tuesday, and then consolidated. Rallied up again, you can see the consolidation. So rally up again and consolidate. We don't know. But I want to see close this inefficiency. But if it doesn't, then we're extremely bullish. If this week we are entering, if it doesn't close this inefficiency right here, then we're extremely bullish, and then I'll be attacking, expecting price to get to this level. Yes, this CB will not hold price as resistance. It will break through to clear this buy side liquidity resting here. So I want to see close this inefficiency before the end of this week. That's my prognostication. All right, so that's what I have for you. So be very careful with your sentiments, because this is January. We are at the end of January, so we want to see some form of consolidation. Power 3, remember power 3, it opens, rallies down, and goes as for Judas swing, and then rallies up. So I want to see if it can, trade lower for a close. That's why I'm favoring this downside. But of course, market will do what it wants to do. We just trade in sync with what the market will offer us, right? For now, if you're a swing trader, you need to pause because the market is not trending right now. Okay, so that's about that. Let's go to the fiber, the Euro USD. On the weekly time frame, I told us that we're going to see a lower movement in price into this area of inefficiency to fill it in. Remember, I told us so. That was exactly what happened. You see our price. I want this is Sunday. We were here, I think. Yes. Good. This is good. This is Monday, Tuesday, Wednesday, Thursday, Friday. So we were here when I told us that I want to see it trade into this area of inefficiency and then break lower to fill in this 4 hours. All right, for daily, it has already filled it completely. This is the line, filled it completely. You can see the wicks, going below, but the bodies are staying within. Let me show you. So this is a high of this candle. Send it out on time and see how the bodies are respecting the high of this candle. So the low end of the daily BC, the bodies are respecting it. And see how the bodies are inside the range. The wicks are permitted to do the damage, but the bodies tell the story, they tell the narrative. So what it seems that when price wants to, rally higher based on this signature, and fill it in completely. So I want to see movement higher. I want to see movement higher. If you measure right now from the low to the high, you see that we are around the OTE levels. That's traded up to close to 79% retracement and see consolidation. I want to see a push higher. Now, where we have liquidities resting, equal highs here. That's where I'm eyeballing. So, if in fact the dollar trades lower, if dollar trades lower, to give Euro USD strength to go higher. That's what I'm looking at. So, if dollar trades lower, facing this inefficiency and trades to close to run sales and liquidity resting here, then that will help, that will give strength to the euro to go higher and clear these relatively poor highs into this area of inefficiency. And then after it does that, we'll see the signature and price action to determine the next direction. Okay, so our anticipation for Euro USD was to give us to the script traded to this level, feed in completely, and see that the low of this candle. You can see perfect delivery. Let me show you. So the low of this candle, if you extend it out, see how we nailed it perfectly, precision, closed it perfectly, and then rejected lower, and then it went lower to close this bit of inefficient. Let's look at it on 4 hours time frame. You see what I can see this level. That was where I can see how they finally broke like I say little this other one. And let me show you. Right here. So fell short of it just by some pips, maybe one or two. This candle is that's the high of that 4 hours candle is 1.0809. The low of this candle is so by 12 pips, right? 1. This 0.12. Okay, that should be like three pips. 3 pips, 2.5 pips. 2.5 pips. 2.5 pips. So fell short by 2.5 pips. That's very close range. Okay, so that was what happened last week. So what are we expecting for this week? What are we expecting? This is no more salient to us, so we take them off. The line to this other one. Can you see? Perfect. The low of this candle is 0.9331. The high of this candle is 0.9319. So by 3 pips, no, it's not up to that. It should be less than 1 pip. Less than almost close to it. Okay, so that's about that. That's what happened last week. Now, if dollar goes down to that level I outlined, it will give this strength to break higher to attack these levels. That's what I'm looking at. So I want to see upward movement on Euro USD. That's if dollar goes down. If dollar respects, if this inefficiency here is not traded to, and dollar in fact goes bullish to attack this level, then we'll be heavily bearish on Euro USD to attack this liquidity that is resting right here, and they're feeling the little area of inefficiency remaining here. So that's what I'm looking at for Euro USD. For Euro USD. Okay, the next one is our cable GBP USD. I told us that we're going to have consolidation. We go back, listen to that. What do you call it? I told us that we will consolidate it because we are at a level where price is neither going up or down. I think, let's see. So essentially, we are just a little above the equilibrium. So we're trading at this level for more than since December. Since December, it's been trading around this level. At least since November. Yes, since November, it's been consolidating around this level. So until we break out of, until dollar becomes extremely bullish or bearish, we still remain within this range. So I told us last week that we could just consolidate around this level because there was no real way it wants to target. Is that it goes up or it goes down. You know, we have sales and liquidity resting there, and then the other, that's the only downside of PDR that we have. Then the upside is to actually trade to clear this no area of inefficiency I can see here. It's relatively poor highs, and this bearish of that block. Other than that, I'm not seeing anything. Let me take that. You can see messy price action. Messy was really, really messy. Last 2 weeks ago, we traded into this 4 hours area of inefficiency. We go to 4 hours time frame to more salient. And then you see how we consolidated around here. It was just messing around. Those of you that are swing traders or even short-term traders, it will be very difficult for you to trade the GBP. So I would advise that you stay off if you're a swing trader or a short-term trader. Stay off GBP for now until it comes out of this range. Until it comes out of this range. Until it comes out of this range. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So this was where we were. This was where we were this Sunday scan. This was where we were on Friday. And I told us that we could just consolidate it because there was nothing really happening here. You know, told us that it's going to consolidate. I'm expecting it to consolidate because there was nothing really happening except it's going to trade lower, clear this, and or it resumes higher. So depending on one will have cleaner direction of the dollar, we're going to have smooth price movement on our cable. On cable. 4 hours time frame, you see this is just jumping around. We rallied higher, cleared, buy side liquidity, traded into bearish order block, and you see momentum low. This was on Tuesday, I suppose. Traded lower, cleared all these, traded really big all lows into this. We didn't even touch it. I don't think it did. Let me see. It didn't touch the bearish order. We did it. And the rally higher, cleared buy side. And this is where we are. So you've just been going, taking intraday runs on liquidity. That's what it's been doing now through. No clear area of inefficiency to run to. No, nothing. This is just messy. Except you're a scalper or an intraday trader or a day trader. You trade liquidity zones and then target them, but there's no clear trend to see. This is just pure consolidation. Okay, so until dollar breaks higher for bullish run, breaks lower for bearish run, that's when GBP US is going to have a trending market. For now, if you're not an intraday trader, please stay out of Euro GBP. Okay, the next one is our Aussie pair. So the AUD USD, we expected it to go lower. I felt that this was relatively poor news. It should trade lower to trade into this bullish order block, but it didn't. It didn't. It just consolidated inside. So like we had like a ranging markets for last week. See, this is rubbish. But from this price action, this is like going to go lower. This is purely going to go lower. So I'm favoring the downside for, yes, this is double top. This double top, I don't see it as support. No. I don't see it as support. I don't see this as support. This to me is not support for me. I want to see it trade lower. We have this area of inefficiency right here that I'm eyeballing. So I want to see price gap lower. That's what I want to see. See price gap lower, trade lower. This should act as a breakaway gap or lower. More movement. Can you see how this inversion FVG has now acted as resistance to send price lower? I want to see price go lower. Okay. I want to see price go lower. It could still come higher. Maybe want to trade back up to this level again, but it shouldn't close above. The bodies of the candle shouldn't close above this inversion FVG should stay within that range. Because if I'm anticipating the dollar to go lower to this level, then that might be Aussie to go higher into this level. So again, until dollar has a clear direction, we might be stuck in this range that we've created, that market has created. So weekly time frame, this is messy. Really, but this is even worse than. I think this is even worse than GBP USD. Let me see. Yeah. So it's what's that? It's really, really very difficult to trade. Very difficult environment. Can you see 1 minute, please? 1 hour time frame. Very difficult. Monday traded lower. Rejection block. We didn't even take out the low of Friday. Early higher. We take a low of Monday. Then finally smashed equal lows. Smashed it. Traded into beta block. Repelled. Valid higher on Wednesday. Cleared buy side liquidity on Wednesday. And then couldn't go lower. Went into bearish order block. Just consolidating on the trade. So we have pool of liquidity resting below. Let's see, pool of liquidity resting below, and because of this area, this inversion FVG, the price has actually acted. You can see price trading to it and acting as a good resistance. So I want to see if that will send price lower to smash these lows. That's what I'm looking at. If you smash these lows and see come back into the range. So if it has done this, then that should be all for AUD USD. I don't see that. I don't see that, except we have re-movement of dollar going low. That's when this could resume its bullish move. I want to see it smash these lows because we have sell-side liquidity resting, the pool of liquidity resting below these lows. I want to see smash it before any price run higher. Okay, the next is Kiwi, the brother to Aussie. What has happened? I also wanted it to trade though. Kiwi actually took out the low of last previous week, but still went traded into it again, close within. So it's still a range, was a ranging week for the Kiwi. So it has broken lower. So this could be just run on stop to send price lower. This is where I'm looking at. So this could be a classic market maker sell model. Smart money reversal. We have your what do you call it? Low risk sell. You have distribution. You have redistribution in the second stage. I want to see it get lower. Attack this level right here because this is consolidation from this high to this low. All these are consolidation because price sent to this point. I want to see it get lower to attack this level. That's what I'm looking at. So if it happens that way, that means Aussie will also go lower to this level of inefficiency. On the 4 hours time frame, messy price action. Price and liquidity has been taken, so want to see sales and liquidity to run. So if we did that, I want to see do it, gap down. Except if we close above this high, then we'll resume our bullish movement. I don't see that in the cards right now. Let's just be careful. We are scalping for now and intraday trading models would really work well from now until we get into second week of February, where we'll have real price movements in the market. So for our loaning, USD card 2 times traded into the bearish order block from a hard rejection. I wanted to see it, this was where we were, and I wanted to see it reject. It didn't reject. Let's see what happened weekly time, daily time frame. Messy price action. Same thing. Monday, Tuesday, Wednesday, Thursday, Friday. This is Sunday candle. So disregard this. Just within the range. Nothing significant. Nothing significant. Nothing significant. It has traded above this. I want to see it to push higher. If you measure this, what do you call it? Weekly CB, the range there, you can see that good. It traded into the 50%. So it's respecting the upper end of the CB, the FVG, the weekly FVG. So That's a telltale sign that it wants to go higher. That's a telltale sign that this wants to go higher. And if that is the case, that might be the same thing that dollar wants to do to go higher to claim this. So we don't know yet. But I accept he wants to leave this as a breakaway gap to show that it's really, really bullish. I want to resume its bullishness. I know that using seasonal tendencies, generally into second week of March, dollar is usually bullish, and then from second week of March, it will start declining. So maybe that's what he wants to do. He wants to rally up, closing days between now and second week of March before it starts declining. Let's watch and see if the seasonal tendency will hold for dollar this this year. Okay, for the first quarter of this year. All right, so based on what I'm seeing here, price might want to resume its bullish movement because as expected, the 50%, the equilibrium the premium level, that's upper half of this inefficiency. Okay, 4 hours time frame. Okay, liquidity swept. So this could be another movement to higher, but these lows are too clear. If you want to come back one more time to sweep it back into this bullish order block before price might want to go, because this is too clear. Price doesn't like to leave smooth edges. It doesn't like to leave smooth edges. I want to see it whip through, clear this sell side before any bullish attempt. Before any bullish attempt. On a Sweezy, this is Sweezy, USD, CHF, and Sweezy. What has happened? We consolidated within that price range. You can see just went back to trade back into this inversion FVG. You can see that this CD has now acted as inversion FVG. So it has come back to act as support. So I want to see it maintain and then resume its bullish movement as well. Can you see how price respected the CB, inversion FVG on weekly time frame? Expected acted it as now it has acted as real support to send price higher. We have this old high here, we have inefficiency here. So we have premium arrays that should be met. All right, so that could be what we are seeing. This is market data sell model, smart money reversal. We had low risk sell, we have distribution, redistribution, and then it's much lower total this sell side. Then we have a reversal now. This is smart money reversal, low risk buy. This is first stage of accumulation. So I want to see accumulation to run higher to this, and I'll find second stage of accumulation before we smash higher. So that could be what we're seeing playing out right now. So let's see what happens. I want to see consolidate here and then send price higher. I don't want to see close below this inefficient, this area that I marked. I don't want to see the candles, the bodies of the candle, let it not close below this level. I don't want to see that happening. They could chop in around here, right? Give dollar index that opportunity to just clearing this, even just by the week, just closing this inefficiency before any significant rally up. That's what I'm looking at. That's what I'm looking at. So this might be a pair that I want to trade this new week because it has that and USD card. They have good signatures in price action for a bullish run. Okay. So last week we had equal highs, it swept it. This was on Tuesday, rallied down on Wednesday into that weekly CB that's now inversion FVG, IFVG. You can see how we consolidated around there, rallied up on Thursday, and then smashed it again, resisted. So we want to see this as another impulsive move higher. Okay, so that's about that. Then our yen pair, the ninja pair, USD JPY. I don't like this pair. I don't like this pair. I don't like this pair. Personally, I don't like it. But these equal highs, I've talked about this for months since last year. this might be a time for you to, go clear out this high and create an all-time high for this spread. Okay, that's what I'm looking at. Maybe a month of February, might do that in February. Okay. Um, so what happened last week? So we had, this is Friday, Thursday, Wednesday, Tuesday, Monday. This is Sunday. This was where we were on Friday 2 weeks ago, and I told us that I want to see price come to this level and then rally higher. It has done that, but the consolidation is just too much. This IFVG has come to act as real support to same price highs. I want to see it go higher to attack this level. That's what I'm looking at. This time right here. So second stage of accumulation to same price higher to sweep this equal highs we have here, right? To clean. The price value above that 4 hours time frame. Messy price action. Sell side traded through into FVG here. Valid up, high side is equal highs traded through it. Came back, attempted to close in the IFVG on weekly time frame, daily time frame, right? Let me see. Daily time frame, yes. Acted as support, see the body is closing above it, and we can see how it chopped around till the end of the week. So let's see what happens. I favor the upside because liquidity pressing above is just too good. So this is another movement to send price higher to that level. Okay, let's go to our indices. The indices is actually overbought at this point. It has created all-time high, and personally, I'm not. There's no real reason why indices are at this level at the moment. Nothing to frame it on other than price just doing its thing. This is the all-time high for indices, and it's just been pressing higher. Now we cannot fight the markets. So if the market wants to create higher highs, we just keep trading in line with the market until this low is violated. So if it breaks below this low, then we'll resume our bearish movement. But for now, since higher highs have been taken out and lows are expected, so I want to see higher movement until market decides to reverse on its own. Okay. So I wanted you to trade to this level as at 3 weeks ago there, but it didn't. So it's been piercing higher. We'll allow the market to ride with the markets. So if you want to go into a trending environment, the indices is a perfect market for you to trade from now because it's trending, going higher, creating higher highs and all that. So let's look at, though we've seen some measure of consolidation, we will not be deceived by this. What happened here, last like 2 weeks ago and 3 weeks ago. So we won't be deceived by this. It will still keep punching higher. Like I said, until these lows. In fact, if it closes below this, as with the body, then we've resumed bearish movement. But for now, we keep going higher until market says otherwise. All right. So that's just it for indices. If you're a swing trader, I believe you should have been in the move already for indices. From this level, you should have been in the move for indices. It's been tearing higher. Okay, and when it got to this, I wanted it to just sweep liquidity here and then break lower. But test this level, it didn't. It kept piercing higher. Can you see the gap? It didn't even come back. So it means we're extremely bullish. So we just allow market do its thing on this pair. So this could just be trade to bullish order block and then same price higher again. That could be what we'll see, or it could just come take out liquidity here and still resume higher. You never can tell. If you're an intraday trader, you want to do scalping and intraday trading. Otherwise, those of you that already entered here as swing traders from this level, I should be in serious profit right now. Okay, so that's about it. No, what do you call it? Real bias on this, apart from the upward movement for this pair. Can you see? So my tier higher again. Then we'll have FVG here. So now I want to click into the FVG and resume its bullish movements. We have a bullish order block here. Price will trade to it again. That's why I said until it trades below this low significantly and closes below it, I'm still bullish on the indices. All right. The same thing applicable to US 100. That's Nasdaq. Nasdaq has shown unwillingness to go higher with respect to SP 500. What did the Dow say? Dow is still bullish. So this might just be a fake might just be a fake decline. So we had bullish order block to the through, and another bullish order block inside here. Price will come straight to it, which is also old high and see rally high. So for last week, it was consolidating for this pair. Monday, Tuesday, Wednesday, Thursday. Let's see what 4 hour did. Consolidation. For 4 hours on SP 500, was it consolidation? Yes, but it looks cleaner than this. It is cleaner than this. So we'll see some form of SMT divergence. Let's see how it goes by this week. This could run these stops here, trade into inefficiency and see rally high. Daily time frame. This is another block, old high. Price could trade up to this old high and see, resume its bullish movements. For the US 30, that's Dow Jones Industrial Average 30. We were bullish last week. Day to day, we had bullish movements. Okay, consolidation as well. 4 hours. Finally went higher towards the last towards on Friday, went higher, cleared buy side. This is a bullish order block. We trace below this, we have this low and then this inefficiency. Let's see what happens. But I still remain bullish on our indices until we break below this low on weekly time frame. That's when I'll be comfortable to resume bearish movement. But for now, I'll keep buying, looking for buy setup. For gold, we're still within this range. We're not taking out. Still within this range. Let's go to nothing significant to talk about on the weekly time frame. At 70% right here. That's the only thing that's only discount I read and seeing. Otherwise, everything is still looking bullish for me. Consolidation, mark consolidation. Monday, Tuesday, Wednesday, Thursday, Friday. Consolidate inside this BC, buy side imbalance, sell side inefficiency. Inside this BC, let me extend it out. Acting as real support. So if it breaks below this low, then we'll have this sell side liquidity resting here, sell stops resting here, inefficiency here. Other than that, if this holds price more, we have equal highs here, intermediate high to be round through, then target the rejection blocks. Okay, so that's about that. Nothing significant about gold right now. Nothing significant. So this could be a run to fill in this FPG and then trade into bearish order block to send price lower. Okay, nothing significant. Nothing significant to talk about gold. Bitcoin. Lastly, Bitcoin. So last week I told us, those of you that watched the last week's recording, I told us that I want to see Bitcoin trade to that level, go listen to it. It's on my YouTube channel at Geo Forex. So it came, filled in, can you see the inefficiency completely, and then rejected. And I told us that this is the last line of defense for the bears, okay? I want to see here act as support to send price higher. You can see how price respected it. I outlined all these before time. Go listen to the recording. You see me saying that I want to see it trade to this level, and it in fact gave me what I wanted. So this is where we are right now. Price has broken short-term high. So the bullish pivot has reached. I don't want to see this act as resistance. I want to see it break through it and come back and test as a support to send price high. So this should act as IFVG, inversion FVG for me. What I'm looking for. Right here. Good. So you should trade through it, at least close above 50%, and then come back, test it, and then rally. This shouldn't act as any form of support, resistance. If this does, then we will resume bearishness. Otherwise, my crypto friends have been talking about what they call it, bull market. So the bull market for me has started. It has started. I told us this area will act as support. It has done that. So the bull market has started, and my area of concern of interest is this area here, around the 53 to 55,000 for Bitcoin. For taking out this high, I don't see that in the cards. I don't see that in the cards. So Bitcoin and crypto traders, I think it's time for you to start buying because it wants to start rallying higher. It wants to start rallying higher. So this is support, and it didn't break. It has filled in completely and it has rejected. So we want to see this run through to that level I outlined on the monthly time of this area right here. Okay. So that is about that. I'll talk to you guys next week. Please, if you have any issue, you can always send me a DM. I'll respond and see how to answer your questions. All right. So, like I always say, trade with the amount of risk that you're comfortable. Don't over risk. The risk appetite should not be too much. The market right now is very fickle. That's in a ranging environment generally. Until we went into the second week of February, I want to see some form of trending environment. For now, let's be very careful with our risk and leverage. All right. All right. So I'll talk to you guys next week, Saturday. For now, for me, it is good night.